So what this calculator does, it reverse engineers how much real estate you realistically would need to try and offset your federal taxes as close to zero as possible, right? Based off your guys' situation, you guys are married and you file jointly, right? Where the annual household gross income is right about 2.2, right? In this scenario, right, we're looking at about $7 million in real estate, but of course, doesn't mean that you guys have to buy a $7 million property. I'll let you know what the sweet spot is when it comes to the right short-term rentals, because typically anything above 1.5, the expense is going to be way too high. The taxes, the interest rate to a point where you really won't cash flow. And I'm also going to walk you guys through how the short-term rental tax strategy works. And like I mentioned, the sweet spot for short-term rentals, you don't really want to go above 1.5. And the reason I say this is because we personally analyze most short-term rental markets out there. Anything above that price point, it's going to be very hard to actually make it cash flow. The sweet spot for you guys is probably going to be $1.5 million. But when it comes to the amount of properties, right, for the first year, and we have to do the material participation, I personally would probably recommend you to don't do more than 3. Of course, I mean, if you do, let's say maybe 2 or 3, right, that's going to be about $3 to potentially $4.5 million in real estate that you will be acquiring.